Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Friday. It is January 14th. It is the last day of the second week of 2022. I think I said it right this time. Where'd the last 2 weeks have gone? Don't ask me. Days just completely run into each other for me. It's about 7:54 right now. The market's going to open up in about an hour and 36 minutes or so. And folks, I want to ask you for a question. If you guys are getting value out of this video, send me an email. If I'm helping you, let me know. support@marketgeeks.com. And for those who've sent me an email this week and last week, I want to thank you from the bottom of my heart. It was very, very nice of you. Thank you, thank you, thank you, thank you again. I really do appreciate it. And I think I responded to everyone. Anyway, now let's get into the morning analysis, shall we? All right, E-mini S&P, as you can see here, is down. NASDAQ is down 100 points. Follow through from yesterday. It's taking the Dow Jones down with it. So the market is probably going to open up lower, substantially lower than random. We still have, before the opening bell, a major report. We have this retail sales report. And in my opinion, this is going to be a market-moving report, a real big report. This retail sales report and this consumer sentiment report together, remember, consumers make up about 70-75% of the economy. So these reports are really, really important because they're going to give us an idea of how consumers are behaving or were behaving around the holidays. And if the traffic, if the store sales, if the numbers are better than expected, the market can really rally on those numbers. I'm not expecting a huge rally. I'm not expecting a miracle, but retail sales the last few years have been better than expected, especially in light of the Fed pumping all this money and Fed aid and so forth and so forth. So retail sales that's coming out in 34 minutes is going to be huge. If you watch this video before the market opens, check out what the retail sales numbers are. Consumer sentiment is coming out during market session. Don't underestimate this report. It's really important, not as important especially as retail sales and coming after retail sales, but it's still very important. Another major report is going to be industrial production. This is going to tell us whether the supply chain issues are impacting production, whether the inflationary pressure is impacting production. Yesterday we had the producer's price index, prices on a wholesale level, and on Wednesday, we had the consumer price index. The numbers were not really shockingly off or anything like that. They were sort of in line with estimates. But today's report, very, very, very important. This is one of my most favorite reports because retail sales can really pump up the market. So make sure you look at these indices before the opening bell because this report's going to come out in 33 minutes, an hour before the market opens. Let's get into global economy, a lot to talk about. China reported its global trade surplus surged nearly 30%, 676 billion. Trade surplus in December swelled to 20% over a year earlier. Exports, now this is interesting, exports rose to 3.3 trillion despite shortages of processing chips for smartphones and other products as global demand rebound from the pandemic. South Korea's central bank raised its key interest rates to 1.25% from 1%, acting to counter inflation. We should start taking some advice from these guys. Don't even get me started. Technology companies led the sell-off yesterday as major indexes went into red caused by the NASDAQ. The NASDAQ has been putting the pressure on the stocks. Smaller stocks fell as well. Rising prices at the wholesale level. Labor Department on Thursday reported its producer's price index. That's the report I told you about yesterday. Prices on the wholesale level, which measures prices at the wholesale level, surged by a record 9.7%. That's the highest, I think, in 40 years, 39 years. The increase set an annual record and provides further evidence that inflation is present at all levels. Like we needed this report to tell us just go to the supermarket, check your egg and milk prices. Inflation has been a key focus for investors as they try to gauge how rising prices will impact businesses, consumers, and Federal Reserve policy on interest rates in 2022. And it's really interesting because right now we just started earnings season. Banks are reporting this week. If earnings season, if the numbers on tech are substantially better and on consumer discretionary, which is why I want to see the retail sales report today, if they're a lot better than the expectations, then it can cause another major rally in tech. Because here's what we have. Let me show you this. We have the bond market. The bond market, as this is really important, pay attention. As the bond market moves lower, interest rates move higher. As interest rates move higher, it's worse and worse and worse for consumers, right? So consumers spend less money on discretionary items as interest rates go higher. So when bonds go higher, interest rates go lower, and that's good for consumer discretionary. So I'm kind of gauging consumer discretionary by using the bond prices because they move in a similar way. And in my opinion, it looks to me like bond prices have bottomed out here for the short term. And I think they're going to go higher before going lower. And if that's the case, there's a good chance there's a really good chance they could take consumer discretionary stocks with them that have been really, really going to the downside. So I'm hoping that this trend we're seeing in consumer discretionary is going to hold at this level right here. I think we're going to go back down, but I'm hoping it'll hold and we'll start moving higher if the retail sales data and the earnings data that starts coming out is better than expected. So it's always a competition. There's always a competition between bonds yield. What am I doing here? Between bond yield or interest rates, bonds, and consumer and tech stocks, because those are hit the hardest by interest rate fluctuations. So right now the bond market's set to open lower, but keep your eye on the bond market. If the bond market keeps going higher, that's relief for consumer stocks. That's relief for tech stocks. So there's always this fight between interest rates and consumer and tech stocks and discretionary stocks. But again, if earnings can say, hey, we're still killing it and we still have room to grow, even if rates go higher, we can see another major rally from the QQQs, which, too many Qs, which right now, I just can't type today, which right now are kind of stuck, as I will show you right now, in a range right here. And I think they may actually even go lower before going higher. But I think tech is pretty close to bottoming out because I think earnings are going to come and save the day. Also, if you look at the put to call ratio, it's starting to show that we're coming near oversold levels. Remember, as we go towards 1, the market gets oversold. As we go towards 70, the market gets overbought. And we're getting a lot closer to 1 than we're getting towards 70. So to me, this looks like the market is getting pretty close to a turnaround to the upside. Does that mean we're going to go higher? Well, what it means to me, honestly, let me just show you right here what it means. It means that we'll probably stay above or between right around this area right here in the 50-day moving average. But right now, if you look at QQQs, you will see they're substantially below the averages. So I'm waiting for these QQQs to bottom out because I think they're going to bottom out pretty quickly because I think most of the downside is priced in. And I think if the Fed sees that the economy is slowing down far enough, they'll go back on their word as they usually do and put prices, continue buying the bonds and cause the inflationary pressure to subdue naturally. That's what I think is going to happen. I don't think they're going to go all or nothing and just stop bonds in March, especially or February, especially if there's way too much pressure on the tech sector. That's my opinion. We are going a little bit higher on the VIX, on the volatility, but not too much higher. And right now, again, we need to wait for the S&P 500 to be above the 50-day moving average. It is below. The Dow Jones is right now still above, but I think it's going to go lower. Keep your eye on the Dow and see if it'll remain above the 50-day moving average. Keep your eye on the QQQ and be careful of buying it. I'd like to buy it when it's above the 50-day moving average. So very, very, very important. Markets are a little wanky right now. If you look at market momentum levels, and we're looking at all stocks trading above 50-day moving average, the momentum levels are looking okay. They're not looking all that bad, honestly. Here, let me just go on a time period and change the line here. They're not looking all that bad. They look like they can be stuck here for quite some time, but they're not overbought or oversold. They're kind of in the middle of the range. Not much is going on. So let me go through sectors. I like to go through sectors to show you where the vulnerabilities are, and then we'll talk about some stocks that we traded recently. Financials are looking really good. I think they're going to kind of hover around this area. I think financials is a strong bet right now. Energy is looking really good. If inflationary pressure is not going to be as high, they'll cool off, but right now they're up there. Utilities, I think, are going to rally, especially if techs cool off. I really like consumer staples. I'm in this sector right now. I think this turnaround is going to take the stocks higher, actually. Healthcare, not so sure about healthcare. Healthcare shouldn't be impacted too much, but it's really taking a dive because I think the biotech is impacting into it a little bit. So question mark on healthcare. Industrial stocks are looking pretty steady right now. Technology, you got to be very, very cautious right now. Consumer discretionary, you got to be very, very cautious right now. Real estate's taking a little bit of a dive, but again, healthcare and real estate, I would put a question mark by those right now. I think those will come back. Materials are doing really great right now. Communication services is doing just like tech and consumer discretionary. So question mark with healthcare, question mark with real estate, upside on materials, upside on utilities, upside on consumer staples, medium as is on energy, as is on financial. So let me say that again. Status quo on financial, status quo on energy, upside on utilities, upside on consumer discretionary, question mark on healthcare, upside on industrial, downside on technology or caution on consumer discretionary, caution on communication services, although these looks like they've bottomed out if you want to know the truth. But be cautious. We may have a third bottom. Material I like. Real estate and healthcare, question mark. Just question mark right now. Not up or down. Now, we had some trades that we did after this broadcast last Friday. We initiated a trade on Rostore. It was a short trade, and we initiated on the 29th, right here. We initiated it right here. Let me just pull up the stock. See, downtrend. We shorted it right here. Well, actually, right here. Went against us for 2-3 days, and then crashed down. We got out right here. Made a nice 22% gain. Could have held it for another 15% or so, but we got out right here. I'm pretty happy with that, and it looks like it's going to go down again on another leg right now. We held the trade for 9 days total, including weekends, and we made 22% on it. Another trade we got out, and we held this one for a while. We got out on a nice long uptrend. This was a bonus stock for, I think, alpha rotation, and we got out with 36% on this one. And we held this one for quite some time. I think over a month, but it's been really good, strong trend. So be very, very cautious. Keep your eye on the retail sales report on consumer sentiment and pay attention to whether or not the stock market, the S&P 500, comes back above the 50-day moving average, which right now doesn't look to be the case. Now, before I let you go, again, I'd like for you to send me an email if you're getting value out of this, support@marketgeeks.com. And here's what I want to tell you. Anyone placing trades during the week may actually be stacking the deck against themselves. I mean, look, every week, thousands of headlines like earnings or bad news out of the Federal Reserve or China, they wreck what may seem to be perfectly good trade setups. Right? Tell me about it, right? I mean, boy, oh boy, they've ruined so many good trade setups in the last few weeks. So instead of traders risking their hard-earned cash during the meat of the week, there's a simple Friday afternoon strategy that helps skip all the craziness. New Money Crew head trader Lance Ippolito, and Lance is awesome. He'll be going live today, 1 p.m. Eastern time, to talk about this powerful weekend strategy. Click the link below to access Lance's presentation and learn more about wiretap alerts. And as always, make sure to like this video, subscribe to this channel if you're watching on YouTube. We need you to stay one step ahead of the market. You do that by following and being notified when we post our next videos. And don't miss Monday, weekly outlook ahead, biggest threats, biggest opportunities. Maybe I'll throw in a couple of setups for you. Have a great weekend and send me an email. I want to know if you're getting value out of this. Bye, guys. Take care. Have a great weekend. And don't stress out about this crazy market. It's been just a rough, look at this. Down, up, down, up. It's been crazy. This is a nice normal market. This is craziness. Bye, guys. I'll talk to you soon. Stay out of trouble.